So I'm going to show you how to combine both analysis to your trading, because when you draw support and resistance on your chart, something like this, if you draw support and resistance on your charts, maybe using the trend lines and using the horizontal lines, or if you like, you can mix any of these indicator, the moving average or any one RSI. Once you draw everything, that doesn't mean that the market will obey your drawings or the market will obey your analysis. You just have to go to any website that you can able to find out the fundamental analysis, that are able to find out what is going on to any currency pair you are trading with. For instance, if you want to look for what is going on in this currency pair and you want to take trade here, let's assume you want to take trade in this currency pair, AUD card. So what are you going to do with AUD card? You're going to look for the currency, the currency event, that is the news event of this currency, which is AUD. Look for the news event of AUD. What is going on AUD? Is it positive or is it negative? Once you are able to analyze the positive and negative, or sorry, once you are able to analyze the the fundamental of each currency, you should be able to find out if the price is positive or negative. For instance, let's say something happened to AUD, you want to trade on AUD card, then we go ahead and look for we check the Forex Factory or investing.com. We look for AUD currency, that's the currency index of AUD. We look for it, then we saw that something is going to happen to AUD by 130. Okay, so maybe by 130, immediately 130, uh immediately it is time, when the market, when the time reach 130, and it seems that maybe the data for AUD currency is positive, which is showing green. Okay, not minus green, not minus red, not red, but it's showing green, that is positive. Okay, so that means the currency of AUD will be bullish. If it is showing positive, it means bullish, bullish. So this indicates that any currency we are trading on that has AUD as the base currency will be what? Bullish. But in some cases whereby there's a mixture in the currency pair, because if you look at what happened, let me show you example. Let me show you one thing about, okay, this is GBP. This is GBP AUD, right? What is in indicating here? Let's say for the past 4 hours or 5 hours, there was a bearish downtrend. But if you check on GBP USD, GBP USD, what is this indicating to us? A bullish trend, right? Okay, so both of them is having GBP, GBP AUD, and GBP USD. But okay, let me do it this way. Uh, this is GBP USD. That is GBP AUD. Okay, look at GBP AUD. This is the price movement on GBP AUD. You see that in most cases it's almost form, let's say the price movement at times look like GBP USD, but in some cases they are not moving at the same direction. So both of them has a trend line and breakout. But you see that GBP USD rise, GBP USD fall, GBP AUD rise, GBP USD fall. Sorry, GBP USD rise, GBP AUD fall. Now GBP AUD rise, GBP USD fall. This time GBP USD is rising while GBP AUD is falling. You see that most of them are having GBP, that is pound. But why is it that there's a mixture in both of these currencies? That is it that because most of the time when we are trading and you want to trade the news on GBP, okay, let's say you want to trade the news on GBP, maybe something is going to happen to GBP, which make the GBP will be bullish. Then you want to trade on this GBP. You choose GBP USD and you choose GBP AUD, GBP USD and GBP AUD. So something happened. GBP was positive. You click on buy, but when it comes to this one, the market starts moving down. You see that there's a mixture in most of this currency pair, most of this currency. That is why when you any trade you want to trade on, any trade you want to take, first check the fundamental of the currency, the base currency, before you take any trade. If GBP USD is base here and GBP AUD also is base, both of them cannot move the same because of AUD. They are not having the same counter currency. They are having different counter currency. Reason why both of them cannot move the same is because one, they are not having the same counter currency, and two, if AUD USD is bullish, so that means GBP any because AUD here is base currency. So if AUD is now counter currency, it will be bearish, not bullish. Here AUD USD, that is USD, is bullish, but AUD now as counter currency will be bearish. That is why if Euro AUD is bearish, GBP AUD should be bearish because both of them are having the same AUD as counter currency. So that means the currency of AUD is bearish. So take note that if there's going to be a news on AUD, there will be some time space, like let me say um, some hours before any news can happen on AUD. News cannot happen on GBP and at the same time happen on AUD. So which means if there's going to be a news on GBP by 1:30, maybe AUD might be by 5 o'clock or 5 p.m. So when you are trading both of them, you know when the currency you are trading on, the currency pair you are trading on. So look for the fundamental of any of those currency. Okay. So that is just it. You can see. So that is okay. So if this is look at GBP AUD. GBP AUD is bearish. Look at Euro AUD also. Euro AUD also be bearish. You see, Euro AUD also is bearish. So in this case, what are we seeing here is that the way the price move according to the base currency. Okay, the price move according to base currency. So which means even this Euro AUD might not be the same as Euro USD. Can be on the same that this different direction. Like okay, this is also a downtrend. This is also a downtrend, but these downtrend are not the same like Euro AUD. Okay, you see that fundamental is very necessary, more important when you're analyzing the chart. First check the fundamental analysis or the economic data of the currency you are trading on. This will help you know when you should enter the trade. Oh, sorry, this will help you know which trend are you following. Is it an uptrend or downtrend? Okay, so now let's jump right to the chart. So on Saturday we were discussing about some golden rules in forex market, entry and exit, and today we're going to discuss about fundamental and technical analysis. So you will see the difference. You will see why fundamental is very much necessary. Because of laziness, some of us doesn't want to be checking the fundamental analysis, the fundamental the economic calendar before we enter trade. Because of laziness, you don't want to be checking. But with today's lesson, with today's class, you will see the importance of using economic data before you enter any trade. In fact, you even take it as the more priority one so that you make use of it anytime you want to enter the trade. So let's begin. Fundamental and technical analysis. When we talk about fundamental analysis is the study of economic, social, and political factors that affect the supply and demand of an underlying financial asset. Okay, very simple analysis. Let me just say the study of economic data that affects the currency. Okay, so fundamental is the study of economic, social, and political factors that affect the supply and demand of an underlying financial asset. Underlying financial asset such as USD, such as AUD, such as JPY, such as GBP, such as Euro, what again? USD, JPY, JPY, AUD, GBP, Euro, what again? I think there's another one. Okay. Then when we now talk about technical analysis is study of chart analysis by looking at the past market activity or history that also include price and volume. Okay, like I said, when I'm trading, I use technical analysis to find the trend of the market. Sorry, I use fundamental analysis to find the trend of the market. Why I use technical analysis to find my entry and exit. Okay, so which means if the fundamental analysis or if the economic data of USD, the economic data of USD is positive, which make the price keep going up, I will start using my technical analysis to look for when should I buy, when should I sell. Okay, just like when you use technical analysis to identify the pattern, which pattern am I trading on? Okay, where is the support, where is this resistance? Okay, okay, this moving average I'm using, what is it telling me? Is this a crossover moving average, or is it a touch and reverse moving average? So when you are trading, apply these two analysis to your trading. Combine both of them, you will see changes. Okay, so but I'm going to show you how to do that. Okay, now let's move forward. A fundamental trader, a fundamental forex trader will analyze the country inflation. I think someone wants to. Okay, let's continue. A fundamental forex trader will analyze the country inflation, the trade balance, the domestic product, that is a GDP, the growth in jobs, okay, and even their central bank benchmark interest rates. This is in what are involves in technical further sorry in this is what we can see in the fundamental analysis. Let's say you want to analyze the country inflation, or you want to analyze the trade balance, or let me say you want to analyze the benchmark interest rates. If the benchmark interest rate of USD, most of the time it's always USD, is if the benchmark interest rate, or let me say if the interest rate of USD is positive, like if what we are expecting, like if the current let me say if the actual numbers or the actual rate, let's say the actual rate that came up is 0.20, and the expected, what we are expecting, that is the forecast, because there are some traders who have already forecast that when the time comes, they are expecting 0.18. They are expecting 0.18. But the actual, immediately the news happened, the actual is 0.20. So that means USD is positive. You will see that the 0.20 will now show a green. They will write it in green color. So which means the interest rate of USD is positive. So from there, you will see the market start moving higher. So you cannot just decide to enter the trade just like that. You have to now use your price action, your technical indicator, technical analysis, such as support and resistance, supply and demand, RSI, moving average, chart patterns, candlestick pattern. Apply any price action you want to, any price action you want to use. Okay, so you use that for your entry and also use that for your exit. So that is why fundamental is very much important in trading, and that is why we uh, must be checking or be researching on anything fundamental that is going to occur. Anything. Let's say, for instance, you have already taken a trade and the trade is going nicely, and you see that, and you forget to check the news, the, like, let's say Forex Factor or Investing.com, anyone you are using, you forget to check the news of that currency you are trading on, and you didn't close the trade, and suddenly the news came up, the news happened to be a negative, and this negative is going to go against your trade. Before you know, the market starts reversing. As the market is reversing, it now hit your stop loss, okay, stop you out of the trade. Before you know, you'll be wondering why is this so. You might be complaining. So when this happens, always check the fundamental news, the economic data of the currency you are trading on from time to time. This will help you stay profitable in the forex market. Okay, I always said it and I'll always repeat it. Do not think that what you are drawing on your charts is what that moves the market. Do not think of support and resistance is what that moves the market. Fine, if it is your support that you know how to draw, if it is charts that you can identify, if it is the line that you can identify, that you know how to draw, why is it that most of the time the market doesn't respect levels? Or why is it that most of the time the market break and give a fake breakout most of the time? Reason why it happens so is because the lines, the drawings doesn't move the market. It is your fundamental that move the market. Like when you have a support let's say you have a support level here, and the market approach this support level. Maybe something happened to the currency you are trading on, it approached the support level, and you are expecting to buy the trade on the next candle. But what happened? As the market is approaching, it touched the level, it reject a little bit. The candle has not yet closed. Again, continue, continue, continue. Before you know, it break the level and close below your level. Some trader might say, "Wow, this is a breakout. Let me start selling." Before you know, something just happened and the market just switching, return back to the zone, and then continue higher. Okay, so which means something happened to this currency. They already know that some trader who have already entered the trade here, that they are going to place their stop loss around this area. Which means if they enter the trade here, they're going to place their stop loss around this area. They are targeting your stop loss. So immediately they hit your stop loss, they will now move into your direction you have predicted before. So they will target your stop loss, hit your stop loss. They will hunt for your stop loss. Once this, because okay, I'll show you on the chart. I will show you on the chart how they target stop loss and move into direction you have already predicted. So there's no how you can escape them. You know, they are the one controlling the market. There's no how you can escape them. Look at this trade now. Look at this trade. As you can see that we have rejection, multiple rejection, multiple rejection. Some trader might say, "Wow, I have gotten a strong resistance. Let me start buying this trade. Let me start selling this trade. I'm seeing a multiple rejection that is equal high." They will say, "Wow, let us buy this, let us sell this trade." That once the price come again to that same level, because of this equal high, once the price come to that level, we should start selling the market. But you see what happened? The price approached the level and you place your stop loss here, your entry is here. The market moved nicely down a little bit. Before you know, they hit your stop loss, take out your stop loss. Your stop loss. They take out your stop loss all the way, because so many traders will say, "Let me extend the stop loss to this level or to this level." Except those who place their stop loss here, they are safe. Okay. So some trader will say, let me extend the stop loss to this level. They will still take your stop loss again. In fact, they want you to lose your money. They want you to blow your account. Okay. This is not controlled by broker, not broker that control those people, the professional, those people who put big money inside the market, and they are the one controlling the market. So not we retail traders that use $100, that use $10, that use $5, $1, that use $20, $20,000. We are just retail traders. We follow what they are doing. So we are not the one controlling the market. So you might be wondering that why is it that the market is moving down or up? They are the one in charge. That is why the market is moving down and up. So if you really want to be like them, trade like them, you must understand the psychological level where they usually enter the trade, where they usually enter the market, and when they usually start their momentum. You should understand it. Okay. So they see that what happened. Look at what happened here. The market, the buyers, because by the time you place your stop loss, you are selling, but they will think of buying. Why is it so? You are selling, but they are thinking of buying at resistance. You are following the golden rules of Forex, which says sell at the highest level. That is sell high, buy low. Fine. You want to sell at this highest level, not selling here. You want to sell. So what they will do is will now start buying the market at that moment. They will start buying. Before you know, when they buy and take out your stop loss, the money you put there, that is your liquidity that you put there. So they will not come back again. See that the market come back to the zone. Still range for a while, because most traders will say, "Let us sell again." That this is a strong candle, let us sell again. They place their stop loss here. They will see come back again the second time, hit your stop loss, and before you know, the market start moving down. This is how they manipulate the market. That is what we. That is when, because when, if you want to be safe, you really want to study when they usually enter the market. Don't worry, I will teach you guys what smart money concept. So I'm going to teach you guys smart money concept, because that will let you know how they manipulate the highs, manipulate the lows. Okay, so it will make you know the manipulation, and how how they manipulate and take your stop loss, how you should be safe, or when you should enter the trade, following them to enter the trade. Don't worry, that will be another topic. That is smart money concept. Okay, so but that is not where we are going for today. I just bring out the topic because I want to let you guys know that when you are trading, you should be more careful. Look at the trade that we took today, this morning. The trade that we took this morning was a bad trade. Actually, my prediction is right. The market did go to my direction, the direction I predicted, which is a sell trade or buy, a sell trade. The market doesn't move down far, or doesn't go down very well, but it just stop in the middle of nowhere and reverse upward. So let's say, for instance, you want to take partial profit, you should have won the trade. Okay, but that is not what I'm after for. Okay, I'm after to see what this market is doing. Let me understand why I lost, because immediately I understand why I lost this trade, why we lost this trade, or the setup I made, why we lost it. Immediately I find out the reason. I tried again to look for an answer. Then I got it. Okay, which means I still go back again to check the old charts. What am I even missing in this chart? And you see that after doing thorough analysis, I sent out the setup and we took the trade, and the market is still going to our direction. Okay, so that is that. Now, fundamental trader will be able to keep up to date with the latest data release. Look at the example of euro. Okay, and this is what is happening at that moment by 8 a.m. That is 8 a.m. in the morning. German flash German flash manufacturing PMI. So you see that it's showing red, showing red. This is the actual. This is actual. This is forecast. This is previous. Previous is what has happened before. That is the data that was released last month. This is what we mean by previous. The data that was released last month. The data that was released last month is positive, which is 62.6. It's positive. It's not red. It's not red. But the data that was released this month on euro is red, and this red indicates, because it's an high impact news, right? This red indicates a sell order. That is a downtrend, a bearish trend. And let me tell you, the news effect lasts most of the time, because, like I said, all this high impact. Look at three, maybe one or two high impact news that occurred today. Nothing happened. Nothing happened. It doesn't move the market at all. The high impact news, because there was no data release. There's no data release for last month, and the same thing the upper last month. There's no data release. Even today, there's no data. That's why we didn't have any impact. That's why it doesn't have any part in the market. Okay, don't worry. I'll show you how to do that in the Forex factory, so that will make it easier. So euro is negative, which means any currency pair that is uh euro is now the base currency. That would be a negative. That would be a downtrend. So which means by when the news occur by 8:30, right? And I was not around by 8:30. I just come online by 8:45. Then I saw that something has happened to euro, and now find out the data that was released. I saw that the euro is still negative. Fine. I will now go. That means the euro is still in a downtrend. Then I will now go to my chart, use some technical analysis to start drawing support and resistance. The euro is negative, is downtrend. When should I enter this trade? When should I exit this trade? So you see that both of them are more important. Just like one cannot work without this if you want to stay profitable in the market. So you just like you cannot just, for instance, if I open the chart now and I didn't check any fundamental or economic data on the currency I'm trading on, I just saw a support resistance and I took the trade. Okay, I took the trade. The market did not even go the way I want it to be. The market started moving anyhow, and in a short period of time, the market hit my stop loss and then I will stop out of the trade. So, which means don't ever think, because many people think that maybe my analysis is not good, or maybe I don't know how to draw levels. You might draw the level fine, but this is not how it works. Even though most of the time, even though this is a support level and the market is approaching the support level, and the news on euro AUD, sorry, on the news on euro is still negative. So they might decided to break this level because it's still negative, which means it's still down. They might decided to break this level. So for that matter, the market might still continue or might still make some retracement. That retracement, you now apply your own technical analysis. That okay, if I see any retracement, I will start selling. Okay, so that is that. So by assessing the relative trend of this and other data points, a trader is analyzing the relative health of a country economy, whether to trade the future movements of that current currency, of that country currency. Okay, so which means when I open my website, when I open Forex Factory, I try to access the data that was given here to know if I should trade in the direction of, or if I should trade up or down. Okay, I'm not saying buy or sell, but you should know the direction of the trend where the market is heading to. That is why fundamental is highly necessary. Okay, you might see the whole chart using price action, using any indicator, use everything you want to use to identify the trend. But if something happened to the currency, it might it might turn out to be a trend change. Okay, so that is that on fundamental analysis. And what again? How economic data affects currency? This is a question. How economic data affects currency? If the economic data is better than expected, it means the currency is positive, and vice versa, which means the other way around. That means if it is not better than expected, it's negative. This is what I mean. If the employment rate or unemployment rate of USD USD is like just what I explained, 0.20, and what we are expecting is 0.10. The previous, that was last month, is 0.30. 0.30. This is the actual that came up immediately the time has reached. This is our forecast. Our forecast is telling us that okay, when we see this data at the same rate that was released and that should be released, it's good. But it's not, that means it's neutral. But if if it is higher than the forecast, if the actual is higher than or is if there's any increase than um, the forecast, it's better. That means it's positive, right? So which means in this kind of situation, the USD is positive. So any currency with USD will be positive, just like USD, USD card, USD JPY, USD JPY. Okay, so which means USD here is bullish, USD here is bullish. So that means we are buying. But currency like Euro USD, Euro USD, GBP USD, AUD USD, which means USD here will be bearish, 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 bearish. Okay, so that's why we call it counter. So which means your USD card is bullish, that is USD here is bullish, this one will be bearish. So that is how you trade them. Okay, so that means if the data is better than the expected, when the data is released and it is better than the expected, that is the forecast, it means the currency is positive, so you can trade the currency. Okay, so some common economic indicators, when we talk about economic indicator, these are common economic indicator. I'm going to explain them one by one. Okay, so let's start with unemployment or employment rates. When we talk about unemployment or employment rates, when our unemployment rate is higher than expected, it can cause the weakness in the country's currency that may cause a bearish downtrend. If the unemployment rate is higher, okay, if the unemployment rate, that's why we always see most of the time when you open a Forex factory, you will be seeing negative, that is um, minus, let's say, like if USD, the unemployment rate is minus 0.20.20, and the forecast is minus 0.10, and the previous is minus 0. The previous was minus 0.30. So you see that minus 0.20 and minus, which one is higher and which one is bigger, which one is small. You can do the math by yourself. Okay. So when the employment rate is higher than the expected, it can cause the weakness in the currency, higher, but it is unemployment. Okay. Higher, but it is unemployment. Just like the number of people who are not employed. If the number of people who are not employed for this year or for this month is, let's say, let me just take it as a simple math. The number of people who are not employed for this month in this country, if it is uh, 70%, if it is 70%, that means the unemployment rate is increasing, and that will make the currency, the country currency, to be weakening. So in that case, I'll be looking for any sell trade using my technical analysis. Okay, so when the unemployment rate is reported to be lower, that means the unemployment rate now reduce than expected. It can cause a bullish upward move in the country currency. But look at the vice versa, which is employment rate. If the employment rate is reported to be lower, means that when the employment, or you can say, most of the time you'll be seeing employment or you'll be seeing unemployment rate. So it's just like both of them are the same. Okay. So this employment rate reported to be lower. It means the same thing with unemployment rate reported to be higher. The same thing. Why this employment rate is higher, it's the same thing with unemployment rate lower. People who are looking for job for this month, or people are looking who are looking for job for this month, decrease. That means when there's a decrease in unemployment rate, which means people who are looking for a job are no more looking for job. Maybe they have, maybe some have already found a job or secure a job. Okay, so that is how it is. The unemployment rate works in the forex market, the economic data. You just have to watch for what is going to happen to this economic data. Read everything about it, analyze everything, check now check the data or wait for the data to be released so that you know what you are trading on. Okay, this will guide you because have it in mind, the news doesn't last too long. It might happen in a minute, it might last for a minute, it might last for a year. Sorry, yes, some currency, some news do last for a year. Okay, it might last for a month, for hours, for a week, okay, for days. It might, so it's, at times it might just last within a second. Okay, so that is that on unemployment rate. Now let's talk about the interest rate. An interest rate is the cost of a borrowing a loan charged by the lender to the borrower. You might be saying that what does this have to do with the forex markets? Let me tell you, it's just like economic. Okay, the interest rate is the cost of a borrowing or borrowing a loan charged by the lender. You borrow a loan from the lender, so what happens? The lender will now require from you the interest rate, that the interest. Okay, so it is expressed as a percentage. That is why on the chart you always see percentage. Let me show you on the chart. Sorry, I'm not talking about the chart. The forest factory, which is more simpler to understand, you always see percentage in some of these where data, when the data is released. Let's go to forestfactory.com. You'll be seeing the okay. Watch out all this data that's released. Look at this. This is having the percentage. So which means JPY, National Core CPI, 0.0 percentage. The actual is 0.0. The forecast is 0.0. Still the 0.0. People don't think of that, means there's no increase at all in that interest rate. And the previous one was 0.2. So there's nothing happened to this currency at all. Nothing happened to this currency. Look at this also. USD. That is CB leading index month over month, which is 0.9. That is the actual. The forecast 0. People forecast that it should be 0.7, but the actual come out to be a positive because it's better than the forecast. So in that case, even it's still better than the previous one. That means the market will be bullish at that moment. But this all should happen if there's any high impact news. If you want to enjoy this kind of analysis, should be high impact news. Okay, so this is also just like interest rate, this also, and this also. Now look at this that has, look at all these that have -1, and this is -0, but check the previous one. There's no minus, there's no minus. This is minus, this is minus. Okay, this is minus, this is minus, but this there's no minus, which means it's still a bearish, still a bearish trend. Okay, still a bearish. Don't think or don't say because they wrote it in the green color. Okay, it's still a bearish, just like this, minus 1.5, minus 1.2. Okay, still a bearish. But if you compare it with this forecast, it is bullish because both of them are more than the forecast. Both of them minus 1.0%, and here this is minus 1.5. This is what people are expecting, minus 1.5. That means minus 1.0 is still greater than minus 1.5. Same thing here, minus 0.6, minus 1. Okay, so that is what interest rate is all about. Now let's move on. Let's see what happens. It is expressed as a percentage of the loan amount known as the principal and charged periodically depending on the specification of the borrowing contract. The principal is the compensation the lender receives for taking the risk of being unpaid at the contract expiration. Okay, lender determine the interest rate they will charge on the loan based on several risk factors. As the riskiness of the particular loan increases, its interest rate will also increase. Take for example, let's say that the US Federation or US Fed Reserve to announce interest rate decision and analysis forecast. An analysis, that is people who follow the news forecast that it's going to be 0.25 decrease. The market sentiment already incorporate the decision during the day, and USD pair gain downward momentum. And again, the Fed deliver the interest rate cuts and dovish statement about the future rate. That means the USD will drop significantly. But if the cuts were higher than usual, like 0.50% instead of 0.25, the market tomorrow will sink the US dollar on other hand. So if the rates were kept as they are, the investor will quickly buy back USD and shooting back to the top. Okay, that means when there is decrease in that rate, when there is decrease, what they will do is just the market will just drop drastically. But when there is now increase in the rate, so investors, the stock investors, the investors will start quickly start buying back, start buying, start buying the market. That is why anytime this kind of news occur, you will only see a strong a strong bullish candle, a strong bullish candle. Take a look like all this Fed news, all this NFP, all this FOMC. You see that when the anytime it happens, you always see a strong candle. Most of the time, you just be seeing the candle becoming more stronger the way it's supposed to. In fact, you'll be seeing that, oh, this candle is very strong. This candle is very strong. Okay, so that is what happened. Now, let's talk about the federal fund rate. The federal fund rate. The federal fund rate is the interest rate US banks charge each other to lend funds overnight. It affects other interest rates. When we talk about the Fed, most of them I call it the Fed fund rate, the Fed, okay, or you call it federal, they are just the short form of Fed, okay, or federal. So the Fed fund rate is the interest rate of the United States of America. Banks charge each when they charge each other to lend funds overnight. This kind of interest rate might also affect other interest rates. That is why when you are trading this USD currency, you must be careful about it, because when the Fed fund rate of this currency is out, it might also affect other, or it might also decrease, let's say affect other currency interest rates. Okay, so that means if there's an increase in the interest rate than expected rate, it means positive, and vice versa. So that is why we need to pay attention to all this. When you are paying attention to, I'm not saying you just give your time to it, read any news, read. You don't know how to analyze the market again, do some analysis. No, at least with in your daily routine, always check the fundamental news, always check the economic data, the economic calendar. Sit, read what is going to happen about it. If you look at my phone, I have so many economic data, have economic this and that. I like even the broker I'm using on Forex, the broker I'm using also, they also have this their own economic data. I like to explore more and more, check what is going on. It might be maybe I want to watch a video, something like that. You know, when something bad happen into a country, when something bad happen to a country, let's say like a crisis, like pandemic, like a earthquake, something like that. Any bad thing that happen to a country, what do you think is going to happen to the currency of that country? It's going to be is the currency of that country will be affected as well. Okay, so what if you don't know what is happening to that current to that country, and you just decided to take a trade? You don't know anything about what is happening. You might be stranded and be confused, be frustrated. Why are you losing trade? So try now to find out the reason why, and why you losing trade. Okay. So this the next one which I want to explain is the gross domestic product. Gross domestic product. What do you mean by gross domestic product? Gross domestic product is the total value of goods and services produced in a country. Okay, total value of goods and services produced in a country. Like country produce oil, country produce this and that, country produce services. Okay, that is when you want to find out the total value of any product that is made in this country. Okay, so it is calculated periodically, usually on a quarterly or a yearly. That is why, let me show you one example. Check on uh um let me show you one. So it's CPI. No, this is not what I'm looking for. Let me check. Okay, just like this. I think that is going to happen on Thursday. I think that is Thursday. Let me check if we have anything Monday, Tuesday. No. Tuesday, no. Wednesday, no. Thursday. We have Thursday. So you see that anywhere you are seeing this GDP, and you will see this Q slash Q. What Q slash Q means? It means quarter over quarter. That is quarterly, quarterly. Some you see MM. That is monthly, like monthly. Some you see YY. That is yearly. Okay. Just like the last quarter of this year, something's going to happen to uh, USD on Thursday by 1:30. So about the GDP, okay. So the data has not yet released. The actual has not yet released until Thursday. Until is it Thursday? Yes, until Thursday. So the data has not yet released. But what we have last week, last quarterly is 6.6, and um, they have already forecast that it's going to be another 6.6, but we don't know yet. Let's see when they start calculating it, when they start giving out results. That is when we know if it is higher than the forecast, or higher than the previous one. So let's see if it's going to be good for trading. That will happen on Thursday. Should happen on Thursday. So what are we talking? Where are we now? That is the gross domestic product. Okay, so it is calculated periodically, usually on quarterly or yearly basis. So to measure how the economic value of the local production activities is changing over time. That is why they must calculate everything. And once they calculate everything, they will now give out the results. Once the result is released, this will now affect the market. That is it. Okay, it will affect the market. So positive GDP figures indicate expansion of the economy, while decline figures signify that the economic is shrinking. Okay, if the economic, or let me say, if the GDP of USD is what is positive, what does it indicate? It indicates expansion of the economy. Okay, that means they are producing this. Let's say they are producing a product, and at the end of the year, or at the end of the month, let's say quarterly, yearly, they now calculate everything and sum up everything, and they show out the result. The result now came out to be that, okay, this is what happened. This is the result. This result is positive. When there's positive, what does it signify? It signifies that there's expansion in the economic already. But when it is negative, it signifies that there's a decline, or economic is shrinking. So which means positive means up, right? Negative, decline figures signify, when you see decline figures, let's say the figures is lower, signify what? Economic is shrinking. So which means the market will be dropping. The economic data, sorry, the economic of that factor, of that asset, will be will drop, will drop. Okay, so that is why we make use of fundamental analysis. So you, when this happen, you now come to your technical analysis, start drawing support and resistance. This is why I should enter the trade. This is why I should exit the trade. Okay, so that is why we always said, do not trade during news time, except you want to risk your own money, or you want to risk some money. Okay, because during news time the market is not stable. Like I said, it's very dangerous to trade during this time. Your broker will widen the spread. So than the spread, maybe you have small account that can contain the balance, that can contain the spread. So before you know, even though the spread doesn't hit your stop loss, you will still be stopped out of the trade. So that on GDP. Let's come to income and wages. Income and wages reports indicate the consumption power that underlying corporate profits and general economic growth. Therefore, income of wages like average hourly wages inform investors and traders when making fundamental analysis to determine the long-term direction of the trend. Okay, the market sentiment usually calm down in the hours building up to the purchasing power reports. Let's say the US average hourly earning report will be published on the first Friday of the month. If the results are positive as unexpected, the US dollar will what? And the American stock and indices will rise. Okay? Why safe haven assets like gold, bonds, silver, something like that? What they will do? They will drop. So which means this USD and the safe haven currencies, the safe haven assets like gold, something like that. What they will do is that they are not moving in the same, that they're just like enemy to each other. That is why if USD is positive, Euro USD, sorry, the gold also will be negative. If USD is negative, the gold also will be positive. So they don't like moving in the same direction. They don't like moving like that. So if anything happened to the income or wages in this country, and the result came out to be positive, what does it mean? It means that it will signal the investors, the traders, to do what? To start buying the currency. That means this US dollar and the American stock indices will now what? Will rise. Why safe haven assets will start dropping like water. So if the results are negative as expected, the market reaction will be reverse the board. So you see that highly more interested and highly necessary when using fundamental analysis. If you are trading and you don't know anything about fundamental analysis, you are not in line with the Forex kingdom, which means you still need to do more. So that now the CPR, what do you mean the corporate profit? What do you mean by profit? Investors use profit, that is the CPR, to gauge the private sector, performance as well as the impact on the national economy. Their investment decision form the market sentiment and inform traders about the general expectation, which means before a CPR report is published, large scale investor large scale investor assess the forecast and analyze the expectation to take position. Okay, once released, the figures are compared to the previous period. That is why once the news release, something like that, once the news release, they will just compare everything together. Which one is positive, which one is negative, which one, what happened to the actual, what happened to what we are expecting, what happened to the actual. So what will now happen? Once released, the figure are compared to the previous period as well, at the same period the year before. When the results are positive, the stock tend to gain what? What's all this? The stock tend to gain value as the investors try to take advantageous position before the company growth further. So if the outcome or the result is negative, however, force the investor to seek shelter and help the national currency pair as well as to rise. On the other hand, if the results are mixed, that is why most of the time you will not see anything that happen to the currency. Okay, If the results are mixed or deviate in the opposite direction of the forecast, a market tumult can cause extreme level of in both stocks and currency, as the investor will be trying to determine what will be the overall effect of the currency performance. Okay, if the results are mixed, you will not see the market will not move high or will not move low. Or what will happen to the currency you are trading on is that if the result is neutral, the market will first move high and move down. So it's just like not being stable, or the market will move high and move down and close as a candle, as close like this, something like this. Strong rejection in both sides. Okay, or maybe close like, let's say for example, the one immediately it happened, it was bullish, and immediately sellers entered, the same height, the same length, the same range. So which means if the result is neutral, this is what is going to happen to both of them. Okay, so that is that on what, on CPR. So technical analysis involve, that is that on fundamental analysis. Technical analysis involve pattern recognition. Don't worry, we have so many of them, but I'm going to we have so many common technical, sorry, fundamental indicator. We have so many we have the balance of trade. We have what again, the CPI. What again, just like anytime, any day, I'm going to use this fundamental analysis as a separate topic. So today I just make sure that I discuss more so that you understand a little. But next time, maybe we choose any day that I will discuss about fundamental, so that you understand more and more how fundamental works in forex market. So now let's discuss about technical analysis. I think someone is trying to say something. Let me check it out. Yes, the speeches is just the to announce, most of the time to announce results or to announce the report. So once immediately they announce, not the speeches itself, not the word even affect the market. Okay. Once they announce the result, the outcome is what that really affect the market. So not the speech, not the word that came out from their mouth, but the outcome of what they are not the of what the large scale investors already announced or already come up with. That's what affect the market, not speech. So I was talking about using technical analysis that is involved in pattern recognition on a price chart, using indicators, use of technical tools for entries and exits. Okay, so let's jump right to the charts and let's see what do we have. Now, when I want to analyze the charts, I've already know what's going to happen to any currency pair. I've checked the interest rate, I've checked everything. Then I jump right to the chart. Some people prefer trading during high impact news, while some people prefer trading anytime or every day, even though there's no news, or even though there's banks holiday, or even though there's nothing is happening to the fundamental, they will still try to take trade. Okay, but because the reason why we do that is because we lose a lot of money. We want to make money, we want to make profit. That is why we keep doing that. But let me tell you, if you want to really make profit in the forex market, in fact, you should trade alongside with the fundamental. Okay, trade alongside with the fundamental. Okay, What I mean is that I'm not saying that if there's nothing happening, if there's nothing that is happening in the forex market in the to the calendar, that doesn't mean you should not take any trade. At least you can take trade, but you should not trade as if you just know that any lost trade you had, you are responsible for it. You should not trade as if you want to be profit, because you are not going against the market. You are not doing according to the market rules. Okay, nothing is happening and you are trading. Or you try, let's say for example, you are trading using technical analysis, you just draw trend line and you are trying to force a trend line. Don't force to draw a trend line. Don't force to draw support and resistance. Draw the way you see it on the chart. Let me show you example. Look at this trade here. Look at this trade. When I want to draw the trend line, I connect from here and here. This, the market is above or something like that. So let's assume that I want to draw the trend line. I started looking for a way to draw the trend line. I adjust the trend line to this on this one. I adjust the trend line to this level. That, oh, I'm leaving this place. I'm leaving this level. Why is it so? I'm trying to do like this, or you try to do like this. This is the best way to draw the trend line. So don't ever fall. Just draw the trend line the way you see, which means the market really touched this level and touched this level, and now there's a spike out from this level, maybe trying to touch the zone before they reverse. That is why the market spiked from the level. So this time you see that market start moving down. Okay, which means you are trading according to what the market wants from you. Do not force to draw support and resistance. Trade what you see, not what you think. Do not say I think the market will move up, or I think the market will go up, but trade what you see exactly. Analyze what you see. Analyze the chart the way you see it. Draw support and resistance the way you see it. But do not say, oh, market will move to this side. Market will move to this side. No. See that this is where we took a set trade here. We took a set trade here, but the market moved down a little, and again resume an uptrend. Resume an uptrend. We finally hit our stop loss. I think our stop loss was inside this zone. I didn't extend the stop loss. If I want to extend the stop loss, we just like risking big money. Even though we extend the stop loss, I'm going to extend it to this level. You see that the market did not even get close to the stop loss level, and before it starts, we will still be make profit by then. But I don't want to extend the stop loss. I just want to use some small stop loss. So the stop loss I'm using is just like using it according to what the market wants from you. So not I'm not saying that when you want to use your own stop loss, you enter the trade here. Something, let's say this example, this is where we enter the trade, right? And you now use your stop loss, yes, because you think that maybe the market will not go up. Give room for the market to play around before it start, because market at times do play around before they start moving to your direction. So give room. That is why I will increase the stop loss to the next uh, above the I will shift the stop loss above next key level. So that is how I do use stop loss. Okay. So here we entered here, we lose, and the market start moving up, and now it's going down. So this time when we use the stop loss, it was above the key level, above this resistance. Okay, above this resistance. See the market try play around and try to go up by touching the support, the stop loss, and they got rejection. That rejection, why I'm also confident about that rejection, which I know the market will not go more up, is because of this zone. If there's no zone, the market will keep going up. Maybe try to touch the trend line also with a strong rejection, hit or stop loss before it start moving down. But because of this zone, and at this zone here, have multiple rejection. We have multiple rejection. So should when I draw the zone, this is where I draw. I did not draw the zone here because the way the market is right now, I can't understand the way the market. I can't draw any zone here, so I have to go to the left side to draw the zone. Then I draw the zone according to the price movement. When the market is approaching this level, it touch the zone here, also the zone, and there's a downward move. Because of downward move, the market finally break the zone. That zone now become a resistance here. That zone here was actually a support zone. It become a resistance here, but the market is not stable at that moment. The market is fluctuating, too volatile. Here also it become a support or support. That means after confirming that this is support, it should become a resistance. That is why I decided to sell. That is why we decided to sell this trade. Okay, take a look at. Let's take a look at. The market is still in a downtrend. The market is still in a downtrend. That means we are not buying this trade. I know some of you who took this trade in the morning might be might be angry because you say that why do we even sell this trade? Why not buy? Well, I know what I'm. Immediately immediately we lost the trade, within few minutes I sent another setup in that same currency pair because I know this is a sell trade, not a buy trade. So I cannot just say because we lost a sell trade here, okay, fine, let us buy. What if we now decided to buy? See what happened on the market. See what happened. This can drop. We won't make any profit. That means even I don't know about you. I'm not sure about you. I don't know about you. The loss I had here when I sold the trade first, I've already recovered. I didn't even make small profit out of it. Okay. So what I'm saying is that do not do not follow the opposite of your gut. What your gut is telling you, do it. Okay. Do not say because you lose here a set trade you want to buy. Go out. The first time I analyzed the chart, I didn't analyze the chart like this. This is not how the chart look like. I have never yet drawn this this zone. I have maybe I've drawn this zone, I didn't know. But the way the chart is now is different from the one I sent, the setup I sent in the morning. So there's different there. We check it out, there's different. Reason is that when I lost the trade, I tried to find out why. Why should I lose this trade? I start analyzing again, go through the chart, find out why, and again I check on Euro USD. I just see that the way I check on Euro index, I go back again to analyze the index, the currency index. I check on Euro index 1 hour, see the same thing. I'm getting the same result, but the fundamental on Euro is not that because it's not high impact news. The fundamental on Euro is not high impact news, but it's showing a bullish trend. Let me show you. I think today, look at it. Look at this. Look at here. Look here. 6:35 a.m. No, 9 a.m. in the morning. Euro. What's it showing? Okay, it's showing like a bullish, right? And finally, showing like a bearish. Okay, still bearish. Yeah, bearish candle. Sorry, bearish trend. But these are not high impact news. That is why I still more rely on that because even though it's not high impact news, most of these low impact news move the market, affect the market more than high impact news. At times you see high impact news and nothing happen. Okay, so that is why I still relying on that. Okay, maybe this will be a sell trade, but unfortunately the market did not even think about that. The market think the market is telling me to think anything something else, that I should think about something. Why should I lose this trade? Why? Let me think why. What is really happening? I now go to the whole chart, analyze it again. So the fundamental of this currency is not what give us the trade. But I think it happened again. Euro, it happened again, but there's no data released. So USD here is positive. USD here is positive. That's medium impact news. That's budget. So here negative. It came out to be negative. Now it's positive. So that indicates a bullish trend on USD. That was by 130. Let's check it out. Any currency with USD. Let's see USD card. Let's see USD card. Okay, be right back. So, like I was saying about USD should be bullish and as base, but should be bearish as. Okay, guys, I was caught up from the network, so I tried to reconfigure it again. So it's taking long time. So I think maybe I should stop here for today. Tomorrow we continue for where we stop and treat the tomorrow topic. So let me stop here for today. So tomorrow, like I said, we're going to discuss about chart pattern, candlestick pattern, money management, and take some trades, do some analysis, and take some trade. Okay, so that will be what we're going to discuss tomorrow. But for now, nothing. Okay, see you guys tomorrow. Have a nice day. Bye bye.